Hello everyone, welcome back to TechnoChart's YouTube channel, and in today's video we are going to talk about 7 chart patterns that all traders should know about. Basically, what are chart patterns? Now, a chart pattern is a shape within a price chart that helps to suggest what prices might do next based on what they have done in the past. Basically, these are patterns that repeat again and again as they are basically representing the human emotions that is present on the charts. Now, these patterns have been into existence since hundreds of years and they still work. In this charts we are going to talk about the different entries, different targets, and how we can take stop losses whenever a chart pattern fails, and different scenarios. Now, chart patterns work best on bigger time frame, let's say on daily and weekly time period, compared to 5 and 15 minute. Now, these patterns can work well on all the time frames. Only thing is you should know when and where to apply these chart patterns, and when to take an entry, when to take an exit. Everything that we are going to talk about will be discussed in this session. Now, these chart patterns have been into existence from hundreds of years and they still definitely work. And so basically we are going to talk about 7 chart patterns, and the first chart pattern that we are going to talk about is a bullish triangle chart pattern. Now, these chart patterns are all continuation chart patterns. Basically, if the previous trend before the pattern occurred was a downtrend, let's say like this, and then there is an accumulation period where the stock moves into a sideways zone, let's say, or it could move in a triangle pattern where the volatility can contract in a tighter range and then break out or break down. So as we are going to discuss about continuation pattern, either the trend could be a bearish trend. Originally there could be a bearish trend, then there could be a pattern occurring here at this level, and then there could be the continuation of this trend, right? Or other scenario could be there could be a bullish trend, let's say like this, and there could be some kind of pattern here, and then there could be a further continuation of the trend. As this is a continuation pattern, we are going to see the original trend continuing. And one more type of chart pattern that you can see is the reversal chart patterns, where, for example, if there was a first a downtrend, then you will see a reversal that is occurring here at these levels, and then you can see a uptrend that can be formed. Okay, so these are different type of chart patterns that we can see, and in this session we are going to see the continuation chart patterns. The first pattern that we are going to talk about is the bullish triangle pattern. Here, if you look at the pattern, you can see that there is a volatility that is contracting in a tighter range. Now, after the volatility contracts into a tighter range, then the stock is going to break out. The originally we are going to keep an SL at the lowest point of the breakout candle, or let's say the lowest point of the triangle, that is this point, and then we are going to take an entry whenever the stock is going to break out above this area. Now, you have to remember that always whenever you're trying to buy a breakout, the volume should be there on the right hand side of the base, so that we are entering into a correct trend of a stock. And the target price generally in this case scenario is generally the length of the firstly the triangle that we have made, right? So this is generally the triangle target that we can replicate on the upper side of the base, so that we are exiting at correct prices. Or you can keep a target of, let's say, 1 is to 2 risk to reward ratio and exit into that particular script. Basically, we are looking for a price to contract in a range where we'll have a horizontal resistance line that is going to provide the resistance to the stock, and we are going to have a contraction, let's say like this, in the area. And then whenever the stock is going to break out, we are going to enter on the breakout while keeping the stop loss below this, right? So this is the structure. And what would be the ideal target? The ideal target would be this area, as we had discussed, and we'll be duplicating this on the upper side, so like this, right? So exactly this is what is the ideal structure that you should be looking for whenever you're taking a trade in case of bullish markets or in case of bullish stock. Now, similarly, a stock can have a bearish triangle pattern where we'll have a area of support, and the stock is testing that area of support multiple number of times, right? So here if you see, the stock is testing the support multiple number of times, and then finally the stock is breaking down from that area, right? Here we'll have a area of resistance, and here you will have a area of support in the chart. And then we can say that this is a bearish continuation pattern where we'll have, firstly there will be an initial downtrend, then there will be a consolidation, or you can say a contraction, and then there will be a continuation, right? So the next pattern that we are going to discuss is the bullish pennant pattern, where we see that the stock is in area of support and resistance, and basically you can see that this is a modified version of the same triangle pattern, right? Only thing is, in the triangle pattern we were looking for a horizontal resistance area, and there was a triangle that was formed in case of a triangle pattern. But in case of bullish pennant pattern, there are two trend lines that you can see on the chart, right? And then there is going to be a breakout from on the let's say if it is a bullish pennant pattern, then there is going to be a breakout on the upper side like this, and the stop loss for the trade would be below this triangle, or below this pennant pattern and the low of the candle, let's say. And the target would be generally this length, right? So we'll be replicating this length from this area, and that could be the initial target. So we can keep let's say we can keep this also as an initial target, because that provides us an area of resistance for that stock, and hence we can keep an initially this as a target for our stock, and then we'll directly duplicate this level, or we can directly replicate this on the upper levels. As you can see in the chart, that this is an example of India Mart Intermesh, where we are going to enter as soon as the stock is going to break out above the resistance area at this level. Now the thing is, you have to keep a stop loss below this level, that is the lower part of the pennant pattern, and the entry would be on the breakout. So always remember that during the breakout you need higher volume, so that you are entering into the correct trade, and the target for the trade would be the same thing that we are replicating here, right? So this is one thing that you have to remember. This is the second example where of Tata Elxsi, where our entry would be taken on the breakout of the candle, and the stop loss in this case would be a smaller. So the bigger the contraction, or the tighter the contraction, the smaller the SL your would be, and hence then you can take a trade with a bigger quantity in that scenario. Now the difference between the triangle and the pennant, as we have mentioned, in this pennant pattern both are in a inclined, or both are the trend lines, and in the triangle pattern one is a horizontal line and one is a trend line, right? So there is a difference between both of them. Now we will discuss about the bearish pennant pattern, where our entry would be on the breakdown of the candle, and our SL would be on the top of the candle, let's say, or on the top of the resistance line that we can see on the chart. And the same thing is going to get replicated, where the target would be the length of the pennant, and that would be replicated from the breakout area, right? So the similar thing is there on the Yes Bank, where we can see that the stock had broken down initially, and then we had seen a target achieve, right? The second last pattern that we are going to see is one of the most common patterns that is there in the chart, that is the bearish flag pattern, where we are going to enter as soon as the stock is going to break down from the support area. So this is basically a channel pattern, basically a continuation of a channel pattern, where we'll have an initial downtrend, and then the stock is moving between the area of the channel, and then finally the stock is breaking down, right? So this is about the bearish flag pattern, and the stop loss and the entry criteria for all the patterns is same, where the SL is on almost the highest point, and the entry is on the breakout or breakdown of whatever the chart that we are trading, right? So this is the chart of Dr. Lalpath Labs, where the stock was in a downtrend initially, then moved into a channel, then finally it broke down, right? So this is a continuation pattern in a downtrend, and this would give you very low risk, high shorting opportunities. And even you can keep a you can keep the stop loss at the areas of resistance also, and not compulsory exactly at this area, right? So it is not compulsory that you need to keep an SL at the highest point of the channel that you can see on the chart. Either you can keep there, or wherever you see that there should be a low risk high reward opportunity. And the same is the bullish flag pattern, and one of the most common patterns, you can say a bull flag pattern or a bullish flag pattern, where initially the target one would be the descending triangle or descending channel, and the for target would be the length of the pole that we see, flag and pole pattern or bull flag pattern. So this is an example of the bull flag pattern that we have seen right now, where the stock initially was in an uptrend, then the stock moved in or the stock pulled back, and then the stock has finally broken out, right? So similarly, where we can see the initial target would be the length of the channel that the stock had formed, and the final target or the target two would be the pole of the flag, right? So similarly here we can see that initially this is the length of the length, or let's say this is the target for the stock, and the final target would be the length of the pole, right? So this was all about the 7 chart patterns that we have seen. We'll again have a second series of 7 reversal chart patterns. S- for example, the W pattern or M pattern or head and shoulder, inverse head and shoulder pattern. For that, if we get 100 likes on this video, we'll definitely come up with that video, and I'll also provide the PDF for the today's session once we get 100 likes on this video. If you like the video, do share it with your friends. Thank you, and subscribe to the channel.